Bismillahirrahmanirrahim. Assalamu alaikum dear viewers and students. This video will provide you the solution of financial statement analysis FIN621 semester spring 2023 assignment number 1. Its due date is 29th May 2023, means tomorrow. Total marks are 30. So let's check another thing. Is there any grace period of 24 hours or not? Yes, we have 24 hours extra grace period. So it means the last day will be on 1st June. Yes, 1st June 30th May 2023, Tuesday. So let's start reading the assignment, then we will go to the requirement, and finally we will discuss the solution. The trial balance of Others Associates Limited is displayed below. The company was incorporated in 2022 as a public limited company and is in the business of manufacturing. Trial balance is there. Equity share capital on credit side 500,000. Profit and loss account balance Jan 1 2022 is 75,000, and the commission received, this is also income. This is available on the credit side. Wages expense 120,000 go to the income statement. Utility charges go to the income statement. Carrying inwards go to the income statement. On debit side, loan interest 5,000 go into the income statement. Rent go into the income statement 35,000. Insurance 9,000 go into the income statement. Machinery at cost 700,000. It is not income, not expense, so it will go to the balance sheet or statement of the financial position. Purchases, so it will go to the cost of goods sold as a part of income statement. Sales, it will go to the income statement. Return inverse means sales return. So 15,000 it is debit, but it will go to the income statement as it is opposite of the sales, so it will be deducted from the sales. Return outwards means it return purchases return, so it will be it is debit and it is credit, so it will be deducted from the total purchases. Furniture and fitting at cost, it means it's a fixed asset, it will go to the balance sheet. Accumulated depreciation and machinery at 1st of January 22-21 to 10,000. It will go to the balance sheet to reduce the value of the machine, and similarly the same action will be applied on the furniture and fittings, and it will also reduce the cost of the furniture and fitting, which is a part of the balance sheet on fixed term or fixed or non-current assets. Trade receivable is a current asset, and trade payables is a non-current liabilities. Bank overdraft non-current liabilities. Opening stock is a part of the cost of goods sold, which is finally go to the income statement. Cash at bank, it's an asset, go to the balance sheet. And term loan repayable in 2030, it means the non-current or long-term loan liability or debt 100,000. So here is another tip that I want to share with you, that you please before starting the solution you must check once or twice the total of the these two columns. When you will be satisfied that these two totals are correct, so you will move to the solution. So let's move to the additional information. Depreciation is to be provided at 10% and 25% on the cost of machinery and furniture and fitting respectively. We have found the accumulated depreciation, but we didn't found the depreciation upon the trial balance. So at the time of getting adjusted trial balance or adjusted cost of goods sold, we are going to deal with this. So what happened? Three accounts are affected under these transactions. One depreciation account is depreciation expense account is created, which is part of the income statement. Another accumulated depreciation account is already available in the trial balance. It will hit the trial balance accumulated depreciation by adding the value of that account and by the same amount, and finally we will reduce the machine and furniture and fitting with the same depreciation expense account by including into the accumulated depreciation. Now the second additional information is regarding the closing stock at 31st December 2022 was valued at rupees 3,115. It both this will go to the both income statement and as well as balance sheet under the current asset. So we are going to identify the accounts which are affected by this additional information. These adjustments are occur due to the two reasons. Either we have forget to enter a general entry, or we have made some errors. So either we are make a new entry or we are going to make a rectification of that entry. So prepaid rent of rupees 3,200 was included in that. So again here one new account is introduces prepaid rent which is not available there, but rent is account is available as an expense on debit side. So 35,000 is reduced by the 32,000. Which type of entry will be passed, we will discuss in the solution section. Provide means provision for irrecoverable debts on the debtors at 1.5%. No bad debt accounts is seenable there. Not provision for irrecoverable debts is seenable there. So this is a totally new entry. Both new accounts are generated here. Accrued wages, okay, accrued wages is there. Wages expense to accrued wages, it will be appeared as a liability in current liability section of the balance sheet, and other expense part will go to the income statement as the part of the wages. Provision for income tax at 20%. You need income before tax to reach that value. Cost of goods sold is rupees 110,000 2,000 or 1.102 million. So requirement: prepare the statement of profit or loss for the year ended 31st December 2022, 15 marks. Prepare the statement of financial position as at 31st December 2022, 15 marks. So let's move to the solution. Now if you have understand that which accounts are affected, we are first highlighted that one, then we are going to pass the relevant general entries, then after that we are just pressing that values into their respective accounts. So let's move to the solution that I have made in Excel worksheet. So here is the solution. This is a trial balance that I have checked, it is correct here, both balances are here. So these are the additional information: closing stock, prepaid rent 32 already included in that we have to be reduced, rent expense by this amount and including prepaid rent, and provision for bad debts is 1.5%. This bad debt and provision for bad debt, both accounts are not available in the trial balance, so we need to create a JE general entry for this one. Depreciation expense is not available while accumulated is available. Depreciation expense for furniture and fitting is not available while accumulated depreciation is available, and furniture and fitting cost is values available at cost. Accrued wages is not available, but wages is available, tax at 20%. So general entry for the first general entry regarding the bad debts. So bad debt account or bad debt expense to provision for irrecoverable debtors. So this will be the new one, and it will provision for irrecoverable debts is also the new one. So these two accounts are new one, and you are going to add it in the adjusted trial balance. So I am not going to create a adjusted trial balance. I am just focusing on the accounts that are hit by these additional informations. Depreciation expense machine 7,000, which is obtained by dividing by multiplying the 0.10 with the cost of the machine, which is 700,000. So it 70,000 it will go to the accumulated depreciation machine as a part of it, means we are going to add it in the value of the accumulated depreciation. So accumulated depreciation machine is going to the machine account, and it will be reduce the value of the machine account in balance sheet. So depreciation expense and for furniture and fitting, and so same action is applied on the furniture and fitting. Come to the wages expenses and accrued wages. So 4,000 it will add the value of the wages by this amount, and another account, liability account, current liability account is created under the heading current liabilities in the uh, balance sheet. So tax expense we need to determine the first earning before tax, then we will find the provision for tax. So provision for tax will be closed into the retained earnings section of the balance sheet. Prepaid rent, so it is 3,200, and rent expense, because it is not part of the expense or income, so it will reduce the rent by 3,200, and it will go to the balance sheet under the heading of current asset by the amount 3,300 under the account heading prepaid rent. This account will be added in the adjusted trial balance. Finally, we have a cost of goods sold value which is equal to 1.102 million. So here is the cost of goods sold as per the given trial balance, and the adjustment that we have made, we made by making the parallel adjusted cost of goods sold here. So opening stock 78,000 plus purchases, this one less return outwards 1,500, wages 120,000, here we make adjustment 4,000, and depreciation machinery here is not available, but here we make this one, we need to add this one here. So let me plus 70,000, and carried inwards a part of the cost of goods sold 10,000 closing stocks 3,000 315,000 and 315,000, and this is the difference which is obtained by subtracting this existing cost of goods sold from the given cost of goods sold. So this difference is go to the equity part of the company, which is available in the balance sheet of the company. So now we have passed all the relevant journal entries, and we make adjusted cost of goods sold. Thus now the turn is to just put the values in the relevant account in the income statement and balance sheet. So we will get the required statement of income statement of profit and loss account, or other balance sheet of national position as on 31st December 22. So sale is 1.525 million, and less return inwards of 15,000. So it is an inner column. So we will get, by subtracting 15,000 from 1.52 million, we will get 1.510 million sales less cost of goods sold. It will be available from the adjusted cost of goods sold, as it is equal to the now given cost of goods sold by the difference of 20,000 that we will carry into the equity section of the balance sheet of the company. So gross profit it is obtained by subtracting this value cost of goods sold from the net sales. So this is our gross profit. So now come to the operating expenses. Utility charges 20,000, insurance 9,000, rent before is 35,000. Now we have to reduce 300 to 3,200 from this one, as the prepaid expenses of 3,200 included this one. So we have to make an entry, and we will just transfer the values here by reducing the rent amount by 3,200. Depreciation furniture and F 25,000, and bad debts 4,800, commission income 6,500. Why it is negative sign? Because when we are going to subtract all these values, so it automatically added into this value. So earning before interest and taxes is equal to now 323,900, loan interest given 5,000. Now EBT, earning before tax, is equal to 318,900. Tax, now here is the tax. So tax is obtained by taking the 20% of this earning before tax, which is equal to 63,780, and it is also cover the empty parts of the JE of tax. So profit after tax means EBT minus 63,780 will be got 255,120. Now come to the headers of shares balance sheet of financial position as on 31st December. First we will take liabilities, equity providing equity funders. So capital share 500,000. So here the opening profit has been given, so you can add both of them and turn into the another similar account retained earning. So either you can write like this, or you can convert into the account retained earning by adding them. By adding them, you will get this 330,120 here. So provision for tax, it will come from the income statement, and difference in COGS 20,000, it will come from the adjustment entry that we have made. So at the time of making or creating adjusted cost of goods sold figure. Now non-current assets, term loan repayable 2030 long term, so we have put 100,000. This is a total equity part. So this is no other non-current liabilities available, so I will keep it like this here. Current liabilities, trade payables, bank of overdraft 40,000, accrued which is 4,000. This is a new account that will be available in adjusted trial balance, and here in the liability section of the balance sheet under current liabilities, total 106, total current liabilities and total liabilities is equal to, by adding this one and this one, we will get 1.1204 million or 1120,400. Now come to the asset sides of this balance sheet. So non-current assets include machine at cost 700,000, that's cumulative depreciation. So in like cumulative depreciation, we have added 70,000, we will get this amount. So by subtracting 280,000 from 700,000, we will get 480,000. Furniture and fitting 100,000. Cumulative depreciation regarding furniture and fitting is 50,000. It is also obtained by adding the new depreciation into the cumulative depreciation. Look at this, I have added this D20 plus H16. So it will by subtracting this 55,000 from 100,000, we will get 45,000. Total non-current assets is equal to 465,000. Now come to the current assets. Current assets, trade receivable is equal to 320,000. Now less is equal to provision for irrecoverable debtors is equal to 4,800. So net amount is net realized variable of receivable is 315,200. Prepared rent 3,200. Cash at bank is 20,000. Closing stock is 350,000. So add up all this one, we will get 655,400. By adding total non-current assets and total current assets, we will get 1120,400. So both the sides are equal, it means our solution is correct. Now at the end, I am going to make a request. If you found any error regarding the placing the amount here, please make a comment in the comment sections, or if you want to add something from your side, drop your suggestion in the comment section, or if you found any mistake regarding calculation, so please must be mentioned in comment section, or if you want to discuss some points of the solution, I am available in the comment section. Thanks for watching. Assalamu alaikum.